Financial. And Alan, when you take a look at, when you hear what President Trump was saying in regards to energy, oil, though, obviously is somewhat affected by the increase in tensions. We saw oil spiking following the higher tensions with Iran starting last week. How do you see that playing out in the energy market?
Well, oil, I use that more of a barometer of economic growth worldwide than anything else. We saw a short-term spike, obviously, with this geopolitical action that we've seen in the last couple of weeks. But will be interesting to see how we hang around the 60 level. Crude oil had traded between 50 and 60 for the longest time, many, many months. That target's 70 on the upside, and now we'll see how this 60 pivot acts here in the next few sessions. But from looking at a macro standpoint, and crude is just one piece of the puzzle here, every market I look at right now is showing signs of stability. We saw the VIX come right back down. It's negative on the day. We saw the stock market make new highs. We saw gold blow off and then come back down. It's negative on the session. Crude oil, like you said, is actually negative. So a lot of these worries and fears, the markets are moving past that, and we're seeing this overall bull trend just continue.
Alan, do you think the markets are viewing this more as just a flare-up, at least at this point?
Well, I think so. Let's remember where we've been in the last 10 years. This is the latest crisis du jour. And if I look at the VIX, which is over my shoulder, the fear factor, we're at 13. The spike high that we saw after last week's assassination and then after last night's missiles was about 16. We were at 18 just in November, and last December we were at 36. So the VIX, the fear factor, is so much lower than it's been. You've seen a series of lower highs over the last few years, and you've also seen a series of higher lows in the stock market. So the correlation is continuing, and yes, we're going to get these periodic flash points, and the VIX will flare up, but it's been beaten down every time over the last 10 years, every time it rallies.
Alan, when you take a look at where the markets are trading today, we have the Dow up nearly 200 points, S&P hitting an all-time high, NASDAQ also at a record. Do you think that it's justified when there's so much uncertainty still in the markets?
Yes and no. So, the stock market is a measurement of people's sentiment, obviously. But what is the choice? People aren't going to put their money in treasuries with these kind of yields. So the president set up an ideal situation for the stock market to succeed, pushing interest rates down. His next lever of power is to knock down the dollar, and that can be supportive of the stock market as well. So, yes, stocks have come a long ways. That doesn't mean they can't go a long ways further. If you look at the NASDAQ, tech has rallied more than 50% from its lows last December. It's December depths when we were very worried about the trade issues. We have the same headlines here in 2019, and now the trade issues have not been solved, but the markets are reacting differently to it. So I think people are focused on how well corporate America is doing, and we're going to see earnings growth probably this quarter, and that earnings recession is going to come to an end. People are going to still see the value of investing in the stock market. So I think from a choice standpoint, to get that yield, that's where money's going to flow.
Alan, you mentioned the importance of earnings. If we do see earnings disappoint, come in below what the street is expecting, how big of a pullback, or do you think it could trigger a pullback soon?
Well, we haven't seen that. Year after year, quarter after quarter, they've set this low bar, and we've hurdled it each and every time. So I'm not smart enough to say this is the quarter that we won't be able to do it. The banks kick off here, and let's remember, the financials still haven't recovered fully from the financial crisis of 2009. If you look at some of those bank stocks, haven't taken out those highs, whereas everybody else has. So there's a lot of upside in banks. And look at the headlines. You'll see that JP Morgan is going to make $6 billion, or Goldman Sachs is going to make $3 billion, or Citibank is going to make $5 billion. Now that's pure profit for the quarter. So, focus on that for a minute. Just digest how well the banks are doing. We're talking pure profit, and that's just one quarter. So that's, I think, a symbol of the profitability that some of these stocks are in right now.
Well, we'll get results from the banks starting on Tuesday. Alan Nuckman, thanks so much.